So friends, one of the objective is to understand global economy, which direction it will go, and position ourselves in such a place that we will benefit maximum irrespective of what options the economy choose. So for that to understand, we will understand a little bit of how the liquidity in US economy works, right? So as the debt is increasing, the liquidity is increasing because there is a lot of money pumping in the market happening. The bond yields are going, which means the cost of servicing debt is increasing, is decreasing, and that means more money available for pushing pumping money in the market. Interest rates reduction means people will take more loans, there will be more money in the market, there will be more, banks will give more loans. So and then the US government spending increases, obviously that money will be given to contractors, and then a lot of money will come into the market. So this is called liquidity. This is a US economic liquidity. It's also called as M2 money. Where it comes, then it goes to the money markets, capital markets, where your stock market and bonds are there, and then real estate and gold. Now coming, these all things were increasing, but then especially since the COVID times, the stock market, real estate, and gold were climbing up simply because a lot of money is coming through this. Now the bond market is unstable. So what is happening is that bond market is a very big market, bigger than your stock market actually. So the money from this will actually flow to other out of the work. Let's look at what the four options US has, right? So US, whatever the US, now you might say global economy you're telling, and then you're talking about US economy. Yes, because 70% of the global trade happens in US dollars, and it is the US economy that actually decides the direction of the global economy. Obviously, if China went into deep recession, nothing happened to the world, right? But if US goes into a deep recession, everyone gets a fever, right? So that's how the global economy works, and that's why US market. So US decision is what actually pump a lot of money into the global economy, and the hyperinflation, and every country has ballooned their inflation, right? So that is why US economy understanding is very important. Obviously, we will look at the BRICS and OPEC. Yeah. So there are four options essentially. One is US keep on printing that money, keep on increasing the way it is doing since 2020, especially, and then other countries will follow the same thing, and then debts will keep on ballooning. Already there is $320 trillion of debt on the global thing, and there is not enough gold to actually cover that up. So the debt is a bubble; it is going to keep on increasing. That is one option. The second option is US government to default and say that, hey guys, I can't pay you now. The US dollars and treasury bonds is gone, right? Then the third option is US fund, the debt of US government actually get transferred to US Fed, and then they zero out the books. That is the option three. And then option four is the BRICS and OPEC actually making a decision rather than the US, because US, they know that they will gonna make obvious decision which is not in the benefit of the other of rest of nations. So that's why BRICS and OPEC countries might dictate that yes, we want to go with gold, and then shrug off all the currencies including their own currencies, right? So if they do that, then there is other consequences. So we are looking at all the four possible options here. Now let's look at it in detail. So in the first option, what happens is US keep on printing and increasing the debt. So the current debt of $34 trillion will increase by $2 trillion every year, and they keep on billowing. And this is without the recession. If the recession comes, then 10, 15 to $20 trillion new debt would be required in a great recession scenario, and that is what. So to ensure that the debt is increasing, they wanted to ensure that the cost of the debt should be reduced. So which means the interest rates has to be reduced and the bond yields has to be reduced, so that US has to pay lesser interest on the bonds, and the interest rates will reduce so that they will keep economy floating. Though unemployment is at high, savings are at all time low, all those things are there, still they wanted to continue by giving a quantitative easing, which is increasing the decreasing the interest rates. Then what will happen is, as the bond yields fall and US keeps on printing, then the treasury bonds goes for a task. People, banks, central banks, and the commercial banks and the large banks, they will all dump the US dollars, and that is what will happen, and the US treasury bonds, so they will dump it. So then someone has to take it, maybe US Fed will take it, right? Then hyperinflation will be there, like how we have seen since COVID time, and then there will be confidence on USD will keep on decreasing. It's a slow process, right? This will induce a slow death of the US dollar. Fact is, gold will rise because This money, people will take the printed money, but instead of investing in a high risk stock market, they might go and buy gold. They might buy real estate. If you are in real estate in India, you should continue to be there, because this will grow in this scenario, right? But US will do that, but BRICS nation will not be quiet in this scenario, right? Because that is why, since 2009 they formed the BRICS, because 2008 they have seen the reckless printing. So now it is time they take the action. So BRICS will not be quiet, they will take action. They will launch their SWIFT alternative. They will launch their reserve currency unit. They will launch gold backed currencies. They will do. They will bypass the US dollars and make direct trade agreements. So those are all things they will do, right? Option two is US to go for default. Now you might think that this is what crap option, but this is also one of a sensible option, because then you can say, hey guys, whatever promise we gave, we are breaking it today. No US dollar, no US treasury bonds. Whatever is there, we are wiping it off, starting in new plate, new era, new generation. Yeah. Then the banks which are holding treasury bonds on their SS side, they will collapse, because on the liability side they have US dollars, on the asset side they have treasury bonds, so they will go for a task. And when the bank collapse, they will make public go bankrupt, because all the savings that they deposited bank will go down. Fund houses will lose, because fund houses are heavily invested in stock market and the bonds. And yeah, so obviously, and also treasury bonds, so they will go for a task, they will go down. And then the impact, obviously this is also impact, but the bigger impact is the other currencies will also go down, because when people realize that US is defaulted with 120% of GDP, then the other countries which are also ballooned like this, they will also, the public will lose confidence on their currencies, or they will also collapse. Share market and mutual fund will have a crash, flash crash, basically. Gold will skyrocket in this case, and real estate will initially come down, because people will lose jobs and they will not be able to payment. But people realize that whatever money is in the market, that has to be actually going into real estate and gold, because this is the safe haven, right? Because physical commodity will become more. Commodities like oil and all, initially it might go down, because the oil prices are going down, but then they will realize the new economy is, the new future is about oil and commodities and gold, which means again they will price. So they will, short term they will come down, but they will go up. In the option 3, the US government debt is actually transferred to the US Fed, which is again a department of US only. So these guys are the ones who will, are like RBI. This is like a government, India government, right? So what they will do is, first, they will reduce all the interest rates, they will reduce the bond yields, and then the Fed will be asked to buy the US bonds, because there are no buyers. When the yields are very low, no one wants to buy that bond, because the returns are less, right? So the Fed will be forced to buy the bonds, the banks will be forced to buy the financial repression will be there. And then once the US government and Fed borrows, Fed converts all these bonds, all the US debt is transferred to US Fed, then US government will zero out the books, and whoever has the other bonds, treasury bonds, they will go collapse. But then there will be limited government spending in this case. The social security, retirees and all which are invested in these bonds and all, they will take a haircut. Even the new currency can be rolled out in the US. Slowdown in recession will be there in this case. Share market and mutual funds will definitely crash, because there is no more, once these things are cash, then there is no more trust on these guys, because the businesses will not make that much of profit, because of the limited spending, right? And the gold will skyrocket, because that will become a safe asset. All the investors of bond will move to gold, right? Then real estate will also come down initially, but again go up, because then they realize that the value of real estate is real. Everything virtual is not the valued thing, right? Then commodity prices will fall here in this case, but in other cases it will rise, because the economy will slow down. People will buy less and lesser commodities. Yeah. So the fourth option is the BRICS nation. Now those three options are US made decisions, right? This fourth option is the other rest of the world making decision, especially the BRICS and the OPEC countries. They might decide, even in the next summit which is happening in this month, they can decide that, hey guys, I will only accept gold as for trade. I will not accept any other currencies. I don't trust the currencies, because We have seen that even China has started printing now, bailing out. US has bailed out. So the trust in all the currency will be eroded. Global trade will pause for a while. Bank runs will happen because then, because and bank runs will happen not in terms of withdrawal but mostly in spending. So people will go and recklessly spend whatever they have. They'll go to the shopping malls. They'll spend. They, because they know that the currency is no worth. Government will try to intervene by stopping those withdrawals and all. These are all the things that can happen. Impact is gold will skyrocket again because the BRICS is dependent on gold as a currency. Gold will become the medium of big trade. So for big oil nations and all countries wanted to trade in oil or bigger communities, they have to pay gold and trade. Then social unrest because some countries don't have gold. Panic buying, then social security again haircut in this pension funds, share markets and all will crash anyways. Real estate in India will initially come down, but so of these four options, you have seen that market is in risk. Though it might go up because of the QE, because of the interest rate slowdown, because of the money coming, there is a risk, and the likely outcome is that they are going to crash. So that is why the conclusion strategy for maximizing profit, right? Maximizing profit with assurance is investing in gold, in real estate, and like plots and lands in tier 3, tier 4 cities, and the real estate flats with this criteria. If you deviate from the criteria, then I can't take a guarantee for this, right? Then leverage and hedge it with gold. So in a hyperinflation situation, like continue to print money in the status quo, then this all will rise. But in the other situation where the risk is increasing and then BRICS is proceeding with its plans, then this the step two, the gold hedge will keep on rising. So this, even if you have 10 to 20%, it will recover your losses, that your risk and leverage that is there with this. Then you have to come out of this cash, banks, FD, stock market, mutual fund, junk LIC policies, because they are high risk, no reward. Sometimes your money will depreciate like anything. You have no idea if certain scenarios, in a worst case scenarios, this will be worthless. So retirement funds also, if you have more than 40 lakhs, 50 lakhs, whatever is the base minimum, you have it. Outside that, withdraw it and invest in gold and real estate. So and ensure that you have a high term insurance. Okay. So but make sure that you follow this. This is the best, high rewarding, lower risk, most possibility option, chances. So should be your strategy. I will explain in detail why comparing stock market versus gold in our next video. I will show you what is the loss you're going to make by investing in stock market. You might say that